And after the long holiday weekend, markets trying to follow through from Friday, trying to build off of those gains that we saw, especially late in the day on Friday. S&P has cut heavy losses today, but still really remains under pressure as there's more warning signs of a possible recession coming to the forefront. S&Ps were down almost 80 points at their low earlier today before cutting those losses and getting right to that flat line. Dow was down about 700 points before cutting losses, and the NASDAQ, which had been down 350 points, actually turned nicely positive. Energy routed today as crude lost almost 10%, now below $100, and nat gas down over 5%. Treasury yields fell again today with the 10-year dipping below 2.8%, but the significance is that the yield on the 2-year jumped above the 10-year. That's known as an inversion, which is closely watched as one of the recession indicators. Tech rallied today as yields fell. We saw Google and Meta and Amazon up about 4% each, but Apple and Microsoft both lagged just up around 1% each. Back on Friday, VolQ, ES options. Well, VolQ today, NASDAQ volatility, it spiked this morning when the market had sold off, and the VolQ got as high as about 35.40, settled fractionally higher on the day. Last Friday, there was a decent amount of ES option volume, about 830,000 contracts, 65% puts. This week's end of week 2, July 32.20 put traded 10,000 times, and at the money ES option volatility sits at about 26%. The CME FedWatch tool still pricing in an 83% probability of a 75-point hike at the July meeting and an 80% probability of a 50-point hike at the September meeting.